Making the simple complicated is commonplace. Making the complicated simple, awesomely simple, that's creative. Charles Mingus. My friends, that is what we have attempted to do, and I believe we have done here at Charting Wealth. We have before you, those who are listening, I'll explain to you what those who are watching and listening are seeing. We have the 3-wave trading formula. What is it? It's the weekly chart, the 2-day, and the half-day. A real half-day in the market is 195 minutes, not 4 hours. The market isn't open 8 hours. So we have the 195-minute chart. And we use these waves, the long-term, the intermediate, and the short-term waves, to be able to watch what the market is doing. And the nice thing about the charting platform we use is every time we have this vertical line, it is tracking at the same place, well, the same time period in all of the charts. So the weekly shows us the week, the 2-day shows us the day, and of course, and again, the 2-day interim, but it shows us, again, it all corresponds on the charts as we move along. And the half day shows us the very smallest chart that we look at, and we are looking to combine all of those trends together along with the simple information that is on our chart, which is what? Nothing more than Heikin-Ashi candlesticks. And again, I'm told that Heikin-Ashi in Japanese means, it's a type of Japanese candlestick. It means that we are looking at the average pace of price movement. It takes out so much of the volatility that can make candlesticks confusing. And of course, we also use a simple volume metric. We do have it colored to show us that if it's green, if the volume is green, it means that we're opening in the preceding candles, well, the subsequent candles, we're opening higher than the prior close. If it is a red candle, a red volume rectangle, it shows us that we are opening lower than the prior close. So it doesn't mean negative or positive volume, but it is giving you a hint that things have changed as far as the candlestick's relation to the volume. And of course, we have this black line that runs horizontal, and it is the average volume metric. So it shows us if we're hitting average volume for the time period, or above average, below average, but it gives us that metric. So again, we use that information along with the trend lines that we plug in to help us determine what is happening. And again, we follow these on a daily basis. And the only thing we ask is that you join us 10 to 15 minutes each and every day as we review the 5 charts that we look at every day, which is S&P 500, NASDAQ 100, 20-year bonds, gold, and Bitcoin. Let's jump into these charts. Things are all over the place today. The S&P is flat, just flat. And as we look at it, we can see where things popped up yesterday nicely. That was on Monday. And then just sliding sideways today. Again, not a lot of volume. We haven't had any volume since the morning on Friday. We have seen where prices moved up some. It did on Monday, but again, light volume. We look at the 2-day chart. This is the first day of the latest 2-day candle. Just started drawing today, Tuesday. Very light volume, not even up to half. And again, we see a green up candle. That's our Heikin-Ashi candlestick. Like I said, though, things are flat. Now you might say, Tom, why don't we have a green up candle if things are flat? Because Heikin-Ashi candlesticks are calculated differently. It's not high open, low close. There are averages in there. And in fact, if you haven't taken our Heikin-Ashi candlestick training, I'm going to put the best one we've put out. There's one that's super popular, even more popular than the one I'm going to give to you. It's older. The best one, though, I'm going to link at the end of today's video for you. So please take it. And even if you understand Heikin-Ashi candlesticks, maybe it's time to refresh yourself. I do that occasionally just so I have in my mind what it is I'm actually seeing with the Heikin Ashi candlestick. So we're flat on the S&P. Is the market topping out? Could be. We can see the high so far this week, 672.99. We look back 673.95. We had 2 weeks ago, 670.23. We had last week, this week, 672.99. So we've not reached that prior high. Is the market topping? Don't know. I mean, we would have thought with the two dojis, we might see this week a down. Now, again, we've got 3 more days. Market could just sink over the next 3 days, and we can have an opportunity to go short at the end of the week. I don't know what's going to happen. I do know that as far as our calculations go, we are still very decently bullish, and we will continue to follow these charts. And again, I'm looking at our trade execution summary grid, our 5-day plus ETF trading analysis and execution plan, where we run the numbers, and it is very bullish on the S&P, even with it being flat today and not reaching the high of 2 weeks ago yet. What about the NASDAQ 100? It is still decently bullish. It was down just barely 0.03%. Okay. So just barely down, pretty much flat. You can see the pattern on the half-day chart looks very similar. What we saw in the S&P 500, very little volume. Again, we see a 2-day green up candle. That again is based upon the prior movements and the average pace. And as we look at where we are this week, the high 612.80 last week, 608.31 the week before, 613.18. A lot of ranging that week. Above average volume opened lower than the prior close based upon that red volume metric. But again, we haven't reached the high that we saw 2 weeks ago. So we'll pay attention. Same kind of thing as we're seeing on the S&P, things sliding sideways. We'll see if the market gets some real kick in the backside to move up further, or if it's just languishing as it tops out. Bonds going up 0.49%, going up to a higher high from these prior weeks. Again, just keeps going up. And we've got a decent bullishness in 20-year U.S. government bonds. I mean, very decent, and a decent backtest accuracy, not as high as the directional probability, which is the highest on our charts, higher even than the S&P. So again, bonds just tracking up for the day. Quite nice. We can see where, again, the volume's not been that high, hadn't been average since last Friday morning. But we continue to move up like stair steps and increasing. You can see as the volume has been increasing and the candle size going into the 4th week, although volume is weak this week so far. That's where we are with bonds. We are long bonds. Gold, man, is gold pulling back after just hammering up for many days, many weeks. Man, did it hammer back today, down 6.43%. That is correct, 6.43%. Nonetheless, as we run the numbers, we are still bullish. I would be, again, very carefully following what's going on in gold. You've been in gold this whole time. It's been very good to you. Be paying very close attention to where gold is going. It is the first red pullback that we have seen since things started gathering speed on the 2-day chart on Thursday, the 21st of August. On the weekly chart, Monday, beginning the week, Monday, the 25th of August. We've seen a couple of slowdowns since then on our half-day chart, but nothing like this. Huge down move in the morning. And again, we can see a red down candle in the afternoon. Volume was super high in the morning where gold dropped and then slowed down in the afternoon. We have reached a higher high on Monday as we saw things jam up, but a huge brakes being put on things. We'll follow, pay attention, see what's going on. We are still showing more than a coin toss, quite more than a coin toss, bullishness on gold, and that is based upon the Heikin-Ashi candlesticks, facts that it's not the long-term Heikin-Ashi candlesticks, fact that it's not breached the weekly trend line, although the wick on the bottom of the 2-day has touched it, hasn't on the half-day, and the weekly still a green up candle. So do pay close attention to gold if you're in that long position in gold. Don't let it all be taken from you. Now, what about Bitcoin? Bitcoin, we can see we're in the second week of red candles, but we're nowhere near that prior low. We can see that the low was reached on Friday. Monday's an up day. Tuesday's an up day. We're still below the weekly trend line, but the wicks in the morning and afternoon on Tuesday have pushed through it. Nice green up candle at the end of the day, but not a lot of volume to back that up. Doesn't look like we're up to half the volume of average on the 2-day either. We got a doji there showing lots of indecision, and we have a little red down candle hammer, moving down, but not hammering down and not reaching the prior low, up 0.93%. 2 days of up movement, lots of indecision in the morning as things were ranging around on Tuesday, but not average volume in the morning or afternoon. So consequently, we are still bearish, just a little more than a coin toss on HODL, which is, of course, our Bitcoin ETF managed by Van Eck. And we'll continue to monitor the situation here. That is where we are as we end the day on Tuesday, go into hump day. Don't forget to listen to the special training we're putting online for you on Heikin-Ashi candlesticks at the end of today's video. And of course, if you're a subscriber, you will enjoy the special training that we have for you today in the show notes. And Patreon members, of course, we've already sent out to you the 5-day plus ETF trading analysis and execution plan on the S&P 500, NASDAQ 100, 20-year bonds, gold, and Bitcoin, along with the trade execution summary grid for Wednesday, October 22nd. God bless, my friends. All the best from the whole team, Charting Wealth.